Guys, how's it going? I'm gonna set up this room real quick for me and Sanjeev, and then we're gonna get started. So this is gonna be a mentoring session between me and Sanjeev. I think we're gonna cover a couple of things today that he needs to cover so that we can help recover his account. So let's get this started. April 13th. Okay, almost halfway through April here. Set up right there. And then let me get him the Sanjeev real quick. All right, here we go. And I'll send you guys a link here in the group as well. All right, looks like we're good to go. Let me just grab this link for you guys here, and then you guys can join in. All right, looks good.
Hey, Shawn.
Hey, Sanjeev, how's it going?
Good, how are you?
Good. Good morning. I know it's morning for you.
Yeah, it's
right. 8 o'clock for you.
Yes.
Yeah, no, definitely. Okay, perfect. Yeah. So let's get started with our session. So what did you want to cover today? I just want to get an idea of what you want to cover so that we can know what to focus on.
I think, it's like we have lots of strategies. Okay, one is just the start of the US session. Then there is your pivot strategy. Then there is a scalp strategy. Then there is a snipe strategy. Then there is 3-minute strategy. So it's just making a little bit confused for me. See, I don't used to do this all chartings and all. So if we can go small one by one, all of them, that'll be great.
Okay, perfect. So I'll just pull up I'll pull up the course here so that we can just go down the list of strategies here.
And yes, that's course. So because in the course now, I think you have changed a lot also. So I'm not sure whether they all are still the same. Like we are not using the trend meter now.
You can use it if you want. So the thing is, each strategy is different. Some strategies use certain indicators while some strategies use other indicators. So it just depends on what you're using, but they all still work. Everything is pretty much the same. It's just they're completely different strategies. So we can go over each one and then I can show you how everything works. Sure. And then once we do that, you can figure out which one you like personally, because obviously everyone has their own preference. So once you figure out what your preference is, then we can probably drill farther into that strategy. But they're all pretty simple. I mean, they're not very difficult at all. So I guess we can go down this list here, and then I'll show you exactly how everything works. So the first one is going to be the intraday strategy. So do you have a specific Forex pair that you like to trade?
I generally play in gold, Shawn.
Oh, you trade gold?
Yeah, I trade a lot in gold actually.
Okay, let's see. So this strategy doesn't work for gold, but the thing with gold is that it's very erratic. It doesn't move smoothly, it's kind of all over the place. So let's see if we can figure out if we can find something here for you using this specific strategy. So if you're going to be applying this strategy here, let me just turn off the ones that are unnecessary. Okay, like some of those right there. Okay, perfect. So I'll go over here and I'll show you an example of how this would work for gold. So this is going to be the K2 intraday strategy. And this is going to be applied. It's supposed to be applied on the 30-minute, but you can apply it on any time frame. It's just, I'll show you how to apply it on the 30-minute so that you can base it off this, but then you can change things later if you want to use it on a shorter time frame or a higher time frame. But for intraday, 30 minutes is pretty solid because it's going to give you a good range between trades that will happen quickly and some trades that will happen later on. Because 30 minutes like the middle ground for intraday. So For this strategy here, the required indicators are going to be the K2 momentum indicator.
Yep.
Second is going to be the K2 trend meter. And then that's it. Optional indicator is going to be the K2sr indicator.
Yep. Now you have SR and SR2.
Yes. And I'll show you what
Sure.
I'll show you how those both work too. Or K2sr2. So the difference between the K2 indicator, the K2sr indicator and the K2sr version 2 is that the so I'll just add them both to the chart for you here. Let's see. So we have SR and SR2. Okay, so the main difference between the SR and the SR2 is that for the SR, it only shows you the closest support and resistance, right? So you can see right here, this red dotted line, this is going to be the resistance, and this green dotted line is going to be the support. So if you just want to see what the closest one is, then the K2sr version 1 is fine. But if you want to see what all of the support and resistances are, then you can turn on the version 2, and this shows you all of them. But you can see that they line up. So you can see this version 2 right here, this above, it lines up with the K2sr1. So you can see here it's pretty much the same thing. And then if you look on the bottom here, you can see that this green SR1 is going to be similar with this zone right here. So it just depends on what you're looking for, how accurate you want it to be. Because here, obviously, if you have all of the zones set up, you can see that there's somewhat of a middle zone here for gold, right? If you have this like that, then you can see that there are more zones for you to look at. You can see how market structure changes from below here to up here. But if you have just the SR1, the original SR, it's only going to show you the first ones right here. So it's the same thing. It just depends on how detailed you want to be.
Sure.
Okay, perfect. So so we'll go over the strategy now. So this is going to be the required indicators, and then I'll just make a new one for the actual strategy. So I'll do that, or I'll just put it right here. And then let me show you the rules. So first, you just want to confirm a valid K2 momentum signal.
Yeah.
And then last, you want to confirm the K2 trend meter matches the signal. And then after that, you can enter on the open of the following candle. So just looking at this here, you can see that, do you know how the trend meter works down here?
Yeah. Green with the blue is your consolidation, red is the down, green is the up.
Exactly. Yeah, exactly. Okay, perfect. So now that you have that there, for this strategy, it's very simple. You just want to confirm a valid K2 momentum signal. So right here, we have a valid buy signal, right? It's green. You just want to make sure that it matches the trend meter. So right here, we have a valid signal. That's going to be requirement 1. Next, you want to confirm the K2 trend meter matches the signal. So they're both green right here. So that's going to be requirement number 2. With those met, you can now enter on the open of the following candle. So you can enter a long position right here. There's a couple different ways to figure out what your stop loss is going to be. You can put it at the closest swing, which would be here. You can put it at the farthest swing, that can be here, or you can put it down here as well. It just depends on your preference.
Preference. Absolutely.
I would probably put it right here at this swing, and then I'd probably have like a little more space, like just like slightly below it. But if you want to put it there, that would be at about 750. So once you have this set up like that, then you can let the trade run. And you can see right there, full TP. See, if you have it a little farther out, you would still have space, even if you were to have it a little farther. But it's by preference. If your risk is higher, then you can go, for the bigger move. If you want to go for just, for accuracy, you can go for more.
I want to put it the same every time, not risking, not taking much. Then I can try the next time in the next momentum rather than
exactly. Exactly. So as you get more and more comfortable, you can, make changes, you can make it wider, you can make it tighter. It's just really up to you. The thing with gold is that it moves kind of irregular. Sometimes it goes high, sometimes it goes low. So based on how you trade it, that's how you can do changes. So this is pretty much the intraday strategy. Do you understand how this one works?
Yeah.
Okay, perfect. So you want to move on to the next one now?
Now this can be used on anything, any time frames.
Yep, pretty much anything, it depends on which one you're applying to. So if you're applying it on the shorter time frames, then obviously you want to change the trend meter, because if you're trading it like on, say the 5 minute or the 15 minute, you're going to want the shorter trend, because you're not going to find a trend on this higher time frame. Like for example, here, if we go on the 5 minute,
Yeah.
your trend here is going to be, it's going to be hard to identify, because you're looking at the trend for the day. So if you want to trade on the shorter time frame like this, you can always change this to, maybe the 1 minute, the 5 minute, the 10 minute, and then possibly maybe the 30 minute. And then it'll give you a tighter, so you can see right here, because you would have taken these trades over here, and some of them might have hit, some of them might have not. But if you want it to be a little bit more accurate, you can just change the trend meter here for the short time. And then if you want to swing trade too, you can always go, on the higher, like maybe the 1 hour, 2 hour, 4 hour, the daily. And then it will show you the trend on, for swing trade. So it just depends on your preference. So that's pretty much how you would apply this specific strategy, but you can change it depending on how you want it. But if you want the overall trend, obviously here, even if you were to go on the overall trend here for the daily, you can still catch trades here, and they'll still, they all win. Like this one wins right here. This one over here wins as well. This one over here wins as well. It still works. It doesn't matter if you want to do it on the 3 minute, the 30 minute, the 5 minute, the 10 minute. It's just really up to your preference. But you could cater that to your trading style depending on how you want to trade it.
Yep.
Okay, so we are. Are you okay with the strategy? Do you want to move on?
Yeah. All good. No, all
good. Okay, perfect. So that's going to be the first one. The next one is going to be the K2 Momentum Pullback. For this strategy, it's slightly different. It's not very different, but it's just slightly different. So right here, it's going to be the same thing. So we'll do the K2 Momentum Pullback strategy on the 30-minute time frame. Same requirements. The only difference is that for the second rule, for the intraday strategy, you want it to match. For the momentum pullback, you want it not to match. Do the opposite. So looking at this here, and also the third one's going to change as well. Let me just change this. So you're going to enter on the high of the signal candle for a buy, or low of the signal candle for a sell. So looking at this right here, the main difference is that you want it not to match the signal and the trend meter. And then depending on where your entry is going to be, that's how it's going to differ as well. So we'll go back to this red candle right here prior to this one that we entered. So looking at this right here, first requirement, you want to confirm a valid K2 momentum signal. So right here, we have a valid sell signal, right? It's red. So we have a valid sell signal here. For the second requirement, you want to confirm that the K2 trend meter does not match. So before we're matching, before we were matching, so we want green and green. For the momentum pullback strategy, we want it to be opposite, red and green or green and red. So right here, basically the way that this strategy works, it's going to indicate to you that this is just a pullback, right? Because if you look at the trend, it shows that the trend is still green. So we're anticipating price to continue back up. So right here, this is just going to be a pullback candle. So looking at this pullback candle right here, once you have the requirements met, we have the valid sell signal here, but the trend meter is green. So with that said, we anticipate price to go up. And once these two requirements have been met right here, you're going to enter on the high of the signal candle, since we're going for a buy, right? Because we want to trade in the direction of the trend. So since we think price is going to go back up, what we're going to do is we're going to put a buy position at the high of this right here. Right there. Because what we're anticipating is, as price continues to go up, it's going to automatically fill your order. And then, we catch the momentum as it swings up to our full TP. So this is pretty much how this strategy right here works. And then we'll move forward to see how this moves. So you can see right here, it still hasn't filled it yet. It's still below. And then as it goes up here, now we're inside the trade, because now it's filled the buy stop. And from this point, if we let it run, you can see right there, still full TP, right? So that's how this strategy works. It's basically the same thing, but it's just a different entry point. So instead of entering when we have the momentum in that direction, this is going to be the opposite. We're just catching it as it pulls back, and then we have a buy stop here so that we can fill it as soon as it goes up.
Yep.
And like I mentioned before, the stop loss, it depends on your preference. You can put it at the previous swing, which would be down here, because if you go prior to this candle here, so if we're marking up this entry, the swing would be somewhere around this area.
Yeah.
So you can place it somewhere around there, about 900 pips. And then if you have that set up right there, you can see that it still works out perfectly. You can see it's very accurate. It goes directly to the profit target, and then it comes back down from there.
Yeah.
So this is going to be the second strategy of the momentum. And it's pretty much the same thing. You can see that here we have the entry at this point. And if you did the entry, it'd be the same thing, but the entry would be a little bit lower down here. So depending on which one you're applying, if you're doing the momentum pullback, it would be here. Yep. If you're using intraday, it would be down here.
Down there. Yep.
Yeah. So let's see. Do you have any questions about this strategy?
No, all good. I've read all those. I'm just, trying to confirm what I've learned and what I've understood.
Oh yeah, no, definitely. Yeah, perfect. Yeah, it's good that you're doing that because you're reinforcing your knowledge to make sure that you actually understand it properly.
Exactly. Yeah.
Definitely. Okay, cool. So we're done with that right there. Let's see what's next. The next one is going to be the scalping strategies. So for the K2 Snipe strategy, we'll go over that next. So let me just go over here real quick, delete this stuff.
Because then what I'm trying to do, I'm trying to back test on gold for some longer term means these strategies one by one, and then whichever suits my goal. Generally, I'm for a short time. I don't sit for a long time. So scalping or sniping, those are my more preferred ones.
Oh, definitely. Yeah. And that's why we're more focused on those right now too, because, with the current market conditions, it's better for us to focus on scalping rather than using the intraday trading, because the market just it's not good for intraday right now because there's so much back and forth with how price is going. So
like last night there was a news for that Johnson & Johnson, and then with Russia, the market spiked like anything. It's like,
oh yeah, spiking back and forth like right here. Today there's so much spiking back and forth right here. Yeah, and it's better. I think it's better to just scalp right now, anyways, because it's easy to just catch moves as they're moving rather than waiting for them to reverse on you eventually. Okay, so for this strategy here, we don't need the trend meter anymore, so we'll take that off. This is going to be the K2 Snipe strategy, 10-minute time frame. And you can use this on different time frames too. It's just for my testing, I use it on the 10-minute. I personally use this only on US 30, but I've seen other people use it on gold, or they use it on I'm trying to think what other ones do they use it on. They use it on gold, and they also use it on Bitcoin as well, on like different cryptos and stuff like that. But it's really up to you what you want to use it on. Like you mentioned earlier, you just need to test it yourself and figure out what fits your trading style the best.
Yeah.
So right here,
putting on the expert RP and Bitcoins.
Oh yeah, definitely. So here we have the required indicators. For this, you're just going to need the K2 pivots indicator.
Yep.
And the K2sr version 2 indicator. And that's pretty much it. These are going to be the rules. You want to confirm a wick rejection off K2 pivot. Confirm a wick rejection off K2sr zone. And lastly, you want to confirm the wick rejection off K2 pivot does not touch candle body. And then lastly, after that, enter on the open of the following candle.
Wick rejection of K2 pivot does not touch candle body. Okay.
All right, so looking at this here, I'm going to turn off the momentum indicator since we're not using that. Turn on the pivots. Turn this off. Let me turn on all the pivots here. Turn on the K2sr. So I'll see if I could find an entry here, and then I'll just rewind to that time period so that we can look at that specific entry. Okay, so we have some zones over here. Just going to rewind to here so that I can show you how this works. Let's see a couple more right here. All right, so I'll just turn this off right here. And then what I'm going to do is I'm going to rewind to the most recent entry. So we have 3 entries, or we have a lot of entries right here. I'll just go back to one that looks easy for you to identify, because there's one right here, this green candle. There's also 3 entries over here. So I'm going to go back and rewind to that area so that you can see, and I'll just cover them as we go. So again, right here, here is the...
Now, when we say it's like, wick rejection of K2 pivot,
yes.
Then which pivot? 1, 2, 3, 4. Which one we talk generally, or any?
It could be any. Yeah, it could be any pivot. It just, what you're looking for is the farthest pivot. So for example, right here, you can see that this red candle is rejecting off the orange, green, and blue right here. But since the blue is the farthest, that's what the main focus is going to be on, because you want to find the farthest wick rejection. So to make things easier for you, I can just hide the other ones. So then you know which one you're focused on right there. This right there. I mean, once you get more advanced, you can keep them all on. And you're going to be ignoring these anyways, because you're not really going to be looking at them. But the farthest one down here is going to be the blue one. So that's going to be our main focus right here, down at the bottom. So for the first requirement, we're going to identify a wick rejection off the K2 pivot. So right here, it's rejecting off the blue pivot. That's going to be requirement number 1. For requirement number 2, you want to confirm a wick rejection off the K2sr zone. So this zone right here, all we need is the wick to be pushing off it. So like right here, this is going to indicate a rejection off this zone. And then right here, you're going to see that there's a rejection off this zone. So this is an example of it pushing below, and this is going to be pushing above. Basically, that's going to be your indicator to determine which direction to trade. Because if you see price pushing away from from this area down here, obviously you're going to be looking for a buy, right? Because you see price going upward from here.
Rejecting.
Yes. So from right there, we have the wick rejection off the K2 pivot. We have the wick rejection off the K2sr zone. And then lastly, you just want to make sure that this last pivot that it's rejecting off isn't touching the candle body. So if I was to hide all of these pivots here and just show you the blue one, you can see right there that it's not touching the candle body, right?
Okay. So under the last candle only?
Yes, the last pivot.
Okay.
Yes. So after you have that right there, you can enter on the open of the falling candle. So as soon as this candle closes, you enter a long position. For this strategy, you kind of have to know what the sweet spot is for the trade. There's a couple different ways to identify it. Like one way to do it is to, well, you trade gold, so you kind of know how it moves, right? You know how many pips it usually moves. So what do you think is like a sweet spot, like in your perspective, if you're familiar with it?
I generally say 2,500 pips in the gold, so $2.5.
Oh, 250 pips, is that what you mean?
Yeah.
Okay, perfect. So 250, that's going to be the sweet spot from, because you're experienced in trading gold. So there we go with that. 250 pips right there. If you were to let this trade run, we let it go forward, and there you go, full TP right there with no drawdown. So there's 3 entries right here. So depending if, you took the first one and say you just missed that one, say you woke up like, 30 minutes late, and then you see the green one right here. This is going to be a second entry. So if you missed that one, you can always enter on the close of this one because the requirements are met there again. So it doesn't matter if you enter this one right here, this would have hit full TP as well. Or if you missed that one too, there's another entry right after. Even if you entered, a bit later over here, you could have entered right there because this green candle is doing the same thing.
But then, but in this example, even the red candle is doing the same thing. Like, it's rejecting the K2sr zone. But it's pushing back. So we have to take the buy one, not the sell one.
Yes, exactly. Because the wick rejection isn't from the top. If you want to take a sell, it would be something like this over here. So if I rewind to over here, you can see that this would be the opposite. So for this green candle or these red candles, it's rejecting off the top from this pivot and off this K2sr. So if you were to take, this trade here, same thing for 250, I believe you had 250. If you were to take this trade here for a sell, Same situation there, right? You can take it for sells, and then again over here, or even over here, if you are to catch this one even later, there's another entry that's available right down here for this red candle right here. Same thing again, we have the wick rejection off the pivot and structure right there. So you take another short position right there. You know, same parameters that you were mentioning earlier, 250. If you were to take those trades there, another full TP there. So there's a lot of opportunities here. You can take these trades, any of these three. You can take this one right here, full TP as well. And then again over here, the ones that we just saw, same situation right there. If you want to take these three, or even if you wanted to take this big one right here, you can also take that one as well, if you decided to enter a little later. But generally, when we get to big candles like this, I usually don't take it because it's a little risky. Sometimes price will need to, you know, retrace down a little bit. So in a lot of situations, I won't take a trade like this. Also, I think there was news right here too. So there's news this morning. That's probably what caused, you know, the big spike in price. Yeah. So this is pretty much the Snipe strategy. Do you understand how this one works, or do you want to go over to more?
Yep. All good.
All right, perfect. So that's going to be it for that one. Let me see the next ones here. The pivot scalping strategy. So we can go over that one next. So, or do you want to go over Josh's strategy too, his 3-minute strategy? Okay, we don't have the video on here on the course because we haven't finalized.
Yeah, I've seen that YouTube video for that.
Okay, perfect. So that one's pretty simple. Do you want to go over that one too, or are you okay with that?
Yeah, we can have a look. Yeah.
Definitely. Okay, perfect. So we're going to go over that one right now. This is going to be the...
So this Snipe strategy is generally on 10 minutes.
Yes, I've tested it on the 10-minute, but I've seen other people use it on other time frames too. So let's here. We'll even take a look here to see. I see people use it on the 30-minute sometimes. I haven't used it myself, so I can't say if it works consistently or not. But here, let's just see if it works here too. So I have the requirements here. Let me just pull up the K2sr here. So it looks like we're going to take trades around this area. Bro, I'll look back to see like any of these here that actually hit. So let's see. The problem with a 30-minute too is because I don't know, this like the sweet spot's going to be a lot farther. Like normally you trade 250 for the 10-minute scalps, but on the 30-minute, I mean, you would know because you would trade it normally, but I personally wouldn't know, so I wouldn't know where to enter. So let's see if because I don't know if this one right here would be a win or a loss. So let me go over here real quick because there is an entry here. So just looking at this here, let's see. Yeah, there's a wick rejection right here off this red candle. So it rejects off the pivot, it rejects off the structure. So right there, if you were to enter a long position here, I'm not sure what your TP stop loss would be. Do you still use 250 for the 30-minute as well, or is this too high?
Yeah. Generally, I take that one because I want to quickly come out, or it can go to 450, but generally I finish it up at 250.
Okay.
See, I trade big lots, 10 lots of gold. $1 difference is $100. So for 10 lots, it's $1,000. I'm in and out quickly.
It's easier. Yeah, it's easier to be quickly. Yeah. That's why I prefer to trade on the 10-minute because you know, on the 30-minute it kind of ranges kind of farther. So like it's quicker to catch it on the 30-minute. But if you were to take this on the 30-minute, you still would have won this trade anyways.
Yeah, that's very quick. Yeah.
So yeah, depending on how you trade it, even if you had 450, I think. Yeah, even if your TP was 450, you still would win this trade too. So you can see here that it still works. It's not just on the 10-minute. It's just if you go on the higher time frame, it's a little more risky because this is a snipe. You know, you're trying to get in and out very quickly, like how you like to trade. So if you're going the 30-minute, that becomes an intraday trade in some instances. If it becomes, you know, if it moves too slowly or moves, you know, it depends on how it moves, obviously. But it looks like it works perfectly fine here. Like even looking at these entries over here, there's like one right here. If you took that trade there, that'd be full TP as well. There's another one right here. If you took this trade right here as well.
In this last one, the green one below then, So now when it says it's touching the wick, rejection of a wick, but then it's also the touching the candle also, isn't it?
So if we rewind to that time there, I don't think it was touching it at that specific time.
Okay.
So yeah, looking at it right here, if we zoom in, you can see the green is below it. It's not touching the body. It looks like it, like when time passes, because because it adjusts with it. But if you're
Yeah.
looking at it at real time, like when it's actually happening, I
Sure.
think, if you're waiting for it, obviously you're going to count down. You're like, okay, the candle is going to close. If you look here, the green candle, the green pivot isn't touching the body. So it'd be a okay entry.
Yeah. Okay. Yeah.
Yeah. So yeah, you can take that one. And there's a lot of entries here. I mean, if you take this red one right here too, looks like that would be another win right there. If you take even these over here, looks like they would still be. So these would be some buys right here. This is where it becomes risky, because if you start to enter trades like this, that's why on the 30-minute, it needs to be maybe a little wider, your stop loss.
Yeah.
Because, depending if your stop loss is wide or small, you might hit stop loss, you might hit TP. That's why I prefer to trade it on the 10-minute, because it's a snipe. But if you want to trade it on the higher time frames, it is possible. Okay, so that's it for this one right here. I guess next we can go look at Josh's strategy, his 3-minute. So let me just fix this again. I'll just delete that. Let's see. Okay, this is going to be Josh. But for Josh's strategy, I think this is meant for the 3-minute. So we can go down to the Josh K2 US 30. Or I think me and Josh talked about it. We're not going to call it Josh strategy anymore. We're just going to call it K2 3-minute.
K2 3-minute. Yeah.
Yeah, K2 3-minute pivot strategy. So for this, you want to confirm a valid K2 momentum signal.
Yep.
To confirm, or 2A, let's call this 2A. 2A confirm signal candle breaks and closes past K2 pivot 3 and 4. Or if that doesn't apply, to B, confirm signal candle is above K2 pivot 3 and 4 for a buy, or below for a sell. And then after that, enter on the open of the following candle. So looking at this right here, looking at this here, let me go to the 3-minute. Here, and then I'll take off these, turn on the momentum, take off pivots 1 and 2. Okay, so with this strategy too, another thing that we usually look out for is we usually try to avoid when price is consolidating. So I think this whole area right here, because price was in consolidation, I think around this area during the US session. Yeah, I think we probably would have just avoided trades during this area. Because obviously you know how to scalp. So when you scalp and price is consolidating, it's best to just avoid when price is going this way. So we'll just avoid trades during this area, and then we'll go back to where price was actually moving. So like if we go over here, like you can see these trades over here, these would actually hit. So I'll just show you, for example, like this one. So we'll go over to A example first. So I'll replay to this one right here. So first, you want to confirm a valid K2 momentum signal. Right here, we have a valid buy signal because it's a green candle with a green buy signal. So with that said, that's going to be the first requirement. The second requirement is to confirm that the signal candle breaks and closes past the K2 pivot 3 and 4. So for example, here, this candle is breaking past these 2 pivots, and then it closes above it. So with that said, we satisfy that requirement. Since we have 2A, we don't need to do 2B. And then you can enter on the open of the falling candle right here. And you mentioned that I think 250 was a sweet spot. Or what do you think the sweet spot is for the 3-minute? Because it moves, a lot smaller than the 10-minute. Do you think it'd be less than that?
It's a little bit less than that. Yeah.
Yeah.
100, 150 is okay.
Okay, perfect. So we'll just do 100 for now. And then we can change, like you mentioned, you can change it if you want to adjust it if it's too tight or if it's too
because in this 3-minute you have a lot more options, and coming out, going in, it'll keep coming back again and again.
Exactly. Yeah, exactly. So like right here, so this would be for this requirement, create the TP. And then again right here for this candle, there's another one right here. It's the same thing. It's 2A because we have a valid buy signal, and then it's breaking, closing past the pivot. So when it's breaking, closing past the pivots, again right there, if you took that trade, another, you know, full TP right there
So
as
is it
well.
when we say break and close 3+4 or 3
Oh,
and 4
three
or
and
3
four.
or 4?
Yeah, 3 and 4.
So both of them it needs to.
So if say if it's right here, like
Yeah.
below the pivot, then it's just breaking past it because it's already breaking past. It's already above the fourth one. If that becomes the case, then it just needs to be above it.
Yeah.
So it doesn't need to break past both of them. That's why I'm showing you two examples here. So the first example, it's breaking, you know, both of them.
Yeah.
Over here, it's only breaking one, but it's already
Yeah.
above the fourth one. So this would be fine right here too.
Yeah.
So basically what you're looking for, it's basically like a trend trade. So you're waiting, this is going to be the trend. The pivot 3 and 4 is going to indicate the trend. So like right here, you can see that, you know, price is trending up.
Yeah.
So what you want to do is when you catch the momentum signal, like right here, you have a buy signal. When you catch the momentum going in that direction of the trend, that's when you want to take the trade.
Yeah.
So it's basically just trend trading. That's what it really is. So this is going to be for 2A. And then if we go back over here, this is going to be a example for 2B. So right here, we have a valid buy signal. And then, well, 2A is not going to apply because the pivots are down here. But for 2B, you want to confirm that the signal candle is above the pivots for a buy or below for a sell. So for example, right here, we have a buy signal and it's above the pivots. So that would qualify for requirement 1 and then 2B. So with that said, you know, you enter on the open of the falling candle right here. And then I think we said 150 for our TP stop loss. And with that said, you go next. And there you go. Straight to TP rather quickly, you know, about 6 minutes, I think you're in this trade. So that would be for 2B. So do you understand how this one works?
Yeah. Got that.
Okay, perfect.
But
Perfect. So this is going to be the
so in my back testing, the 2B was not working many times. So I'm still working on it. It was failing that a lot of time.
Oh, it wasn't working very often.
Yeah.
Here, let me see. I'll go look back and we'll see which ones are no good. This is usually what's a good thing to do if you're you know, back testing. It's good to find which ones don't work well so that we can see you know, what can be done differently or how you can avoid the bad trades. So like I mentioned earlier, I wouldn't take these trades here because price is just, you know, consolidating. So I probably would avoid these trades over here. That might be one way for you to avoid losses. Just avoid trades when price is consolidating, like right here. But let's go over here to see. So again, right here, like this area right here, I think this would be an area of consolidation too. So I don't know if I would take trades around this area either. But if you were to take trades here, I think, let's see if any of these would win. So this one right here, this is green. If you were to take this one, yeah, so depending on where your TP stop loss is, it looks like, yeah, I'd probably hit your stop loss first. So I think this area right here would be an area of consolidation. I would probably avoid that trade. Yeah. This one down here, let's see. So this one over here looks like it would hit, but like I mentioned, you know, some of these trades will hit, sometimes they won't hit. It just depends on how market conditions are. If it's moving, if it's trending, then it'd be easier for it to hit. But I think when it's in consolidation, that's usually the time where it doesn't work out very well. Because right here, this red one over here looks like it does work.
Also in the momentum, does it make a difference if the candle is with a wick or the hammer?
On the 3 minute, I wouldn't really focus on it too much because, you know, usually on the 3 minute or the shorter time frames, there's a lot of noise on it. So you'll see patterns sometimes, like for example, here you see the hammer, but sometimes it doesn't follow through with how it how the candle, you know, shows. Like for example, right here, you can see that we have like a doji.
Yeah.
Like if I scroll in, or yeah, like a doji right here, it doesn't really show that it's going to reverse. It just ends up coming down. Like price is coming down, shows a doji. So, you know, generally if you see a doji, it's gonna reverse, but then it ends up continuing down further. So I personally don't trade patterns at all, and I don't trade candlestick patterns, but I think on the 3 minute or anything below the 30 minute, I think it's not really it's not very accurate. If you're looking at certain dojis, like for example, right here, you know, you have the doji right here as a signal candle, but it's a, I mean, it's a hammer, it's a down hammer. usually if you see that pattern on a higher time frame, you'll see it drop down heavier. But right here, it only drops down a few pips, like 100 pips, and then it shoots all the way back up. So I personally don't look at it on the shorter time frames. If you're on the higher time frame, yeah, it would make more sense. But I don't think it's very accurate on the shorter time frames. Okay, so for this strategy, do you want to keep looking at more examples, or do you want to move on to the next?
No, that's okay. I've done that.
Okay, perfect. So we're done with this one right here. I think the next strategy on the list is the K2 pivot strategy, K2 pivot scalping strategy. So this strategy is very similar to this one, except there's variations to it. This one has more requirements. So I'll show you how this one works. This one is generally applied on the well, you can apply this on any time frame, but I think I like it on the 10
minutes.
Yeah, applying this on the 10-minute here. So basically, let me see if I could find an area. So like, let me turn on the other pivots. All right. So looking at this over here, I'll put the requirements over here. For this strategy, you're using the same indicators. You're using the momentum indicator and the K2 pivots indicator, and that's all you need. So this is going to be the K2 pivot strategy. So first, you want to confirm a valid K2 momentum signal. Second, you want to confirm a retracement. 3, confirm a rejection off K2 pivots area. And then lastly, you want to confirm, this requirement, so confirm overall trend, K2 pivots, and lastly, confirm a valid K2 momentum signal. And then after that, you can enter on the open of the following. So it's kind of it's a similar strategy. There's just more requirements to it. So first, you want to confirm the overall trend using the K2 pivots. You understand how the trend works with the pivots?
Yeah.
Okay, basically. So yeah. So right here for the first requirement, since price is below the pivots are angling downwards and they're spread out, you could confirm this as a downtrend. So that's going to be requirement number 1. Next, you want to confirm a retracement. So you can see price was coming down right here. And then from this point, price ends up coming up from here. So this would be considered a retracement from down here. And then for the third requirement, you want to confirm a rejection off the K2 pivots area. So obviously right here, you can see when price comes up, it rejects off this point right here, right?
Yep.
So that's going to be the first 3 requirements. And then the last requirement is going to be a valid K2 momentum signal. So right here, we have requirement number 1, price is trending down. Right here, we have the retracement. Right here, we have the rejection. And for the last one, we would have the K2 momentum signal right here. So with that said, we enter a short position right here. And then I think you said for the 10-minute, the sweet spot was 250 pips, if I'm correct? Okay, so 250 pips. And then if you let that run, there you go, full TP off that one right there. Well, you already know what the sweet spot is for this. I personally would probably put it a little bit higher, like to the swing. But I mean, if you understand that that's the sweet spot, I don't trade gold, so I wouldn't know what the sweet spot is. But yeah, if 250 is good, then that looks perfectly fine to me. So let's see. Do you want to see another example, or are you okay with this one?
So in this one example means when we say about the rejection to the pivots, is it pivot 1, 2, 3, 4? Which one do generally we look for?
It just has to be in the area. So you want the rejection to be around this area, because what you're looking for is, so first we identify the trend, right? So since we identify the trend, we already know that price is likely to continue downwards, because we want to trade with the direction of the trend. So right here, we can see the price is trending down. You just want the rejection to happen anywhere within the pivots right here. You don't want the rejection to happen all the way up here, because if the rejection is so far away, then odds are it's probably going to reverse on you.
Trend change, reverse.
Yeah, like example for like right here, like prices price is trending down right here, but then the rejection is all the way up here, right? So if the rejection is all the way up here, this can show that possibly this might be a change in trend, right? Instead of going for a sell, you might be looking for a buy now. So you just want your rejection to be in the area of the pivot. So you want it to be within the vicinity of the pivots within that area. If it's too far out, then it's probably going to be a reversal in the trend.
Yeah, but then in this one also, like just when we were talking in the green, before that, the green one, it's just rejecting at that point with the pivots, but then it's keep increasing. But before increasing, before passing up and changing the trend, we could have taken the position and that would have gone into loss.
For this one right here?
Yeah, it's at 130, if we say.
130, let's see. I'm trying to see where the 130 is. Where's the 130 at, you said?
At the bottom, it's written between 1 and 2. Yeah.
Oh, right here.
Yeah, yeah.
Mm-hmm.
So this started coming up, retracing and then rejecting.
Yeah, so yeah, it came up and then it came back down below.
Yeah. After this one, the green one, the green
this
movement.
Here.
Yeah, yeah. So let's see this one.
Oh yeah, sure. So this wouldn't be an entry because it's not. So for this one right here, you would need the rejection to be like it's already past the pivots, right? So this is the same thing that we mentioned over here. You want the rejection to be within the area of the pivot. So like for over here, you see how these rejections are in the area of the pivots? This rejection is way past the pivot. The pivots are above it.
Yeah.
So I personally wouldn't take this trade, but I think if you took it, it probably would still work, right? Let's see.
No,
yeah. For this one right here, this would be like you can use a different strategy for this. Like that's why there's different strategies that you can apply for. That's why we have different variations, because a lot of the strategies, they're pretty much the same thing. It's just that they have different entry points. So I think for this right here, let me see. If we're on the 10-minute, if you're using the scalp strategy or one of the the intraday strategy or something like that, like let me see if I can turn on the trend meter down here. Like if we had the trend on the short time frame, let's see, 5-minute, maybe 10-minute, or maybe even less, 1 minute, 3-minute, 5-minute, 10-minute. No, it doesn't show. Yeah. So like depending on how you're applying it, I mean, there's different strategies that this could possibly be an entry for right here.
Yeah.
So it wouldn't qualify for the pivot strategy, but if we go over like every single strategy, there might be something that would qualify for this one right here, depending on what we were applying. Because most of our strategies are based off the momentum indicator. So like if you see something with the momentum indicator, there's probably something that we can apply that could possibly, satisfy this as an entry point. But it wouldn't satisfy for this pivot strategy, because for the pivot strategy, the requirements wouldn't be met for this one.
Yeah.
Yeah. Okay, cool. So do you want to go over another one, or do you want to go over a different strategy?
Yeah, different is okay.
Okay, perfect. So we're done with that one right there. That's the pivot strategy. Let's see. The next one over here is going to be the original scalping strategy. So for this one right here, it's going to be pretty much the same thing as the intraday strategy. It's the same thing that I was mentioning earlier. So I'll just go over this again. So it's basically the intraday strategy, but it's done on the short time frame, on the 10-minute. So if you wanted to do that, you would just change the trend meter down here to the shorter time frames. I think for the 10-minute, we would probably change it to, let's see, 1 minute.
Yeah.
1 minute. Actually, I think 1 minute might be too low. So maybe, yeah, I think these would probably be the good settings for the scalping. Since you're trading off the 10-minute, I mean, depending on which one you want to trade on. If you want to trade on the 5-minute, you can go lesser. But if you're trading on the 10-minute, I think this would probably be the good settings for it, because you want to have the trend showing the short-term move. So you want to see where the price is going, 5 minutes, 10 minutes, 15 minutes, and 30 minutes from current price. So this is going to be the same thing as the intraday strategy. This is just going to be the K2 scalp strategy. So for this one, you just confirm a valid K2 momentum signal.
Yep.
To confirm K2 trend meter matches signal. And then lastly, enter on the open of the following candle. That's pretty much it. Same thing as we did earlier for the intraday. It's just on the shorter time frame. So going back to here, I'll just take off the pivots. And then that's all you need. You need the momentum indicator and the trend meter down here. So if we go back to this entry over here, you can see that this red candle matches with the trend meter. So with that said, it's the same strategy. We just enter a short position right there. Okay. We're on the 10 minutes, so I think it'd be 250 you mentioned, 200 or 250. I'm not sure which one was it, but if we do that there for 250, you let that run. There you go, full TP right there. And then again, right here, there's another entry for this one. Same thing again. You enter that there. Yeah, so I think if your TP was 250, it might be a little too wide, slightly missed it. So depending on where you put your TP stop loss, this could have been a win, it could have been a loss. Because I think you mentioned it's between 200 and 250. So, I mean, depending on how you trade it, you know, I don't know if something was going on around this time. This is around London Open. I know during London Open, they have the London breakout for gold. So I'm not sure if that's what affected this right here. Generally, when I trade, there's like certain times where I don't trade. Like I don't like to trade right before London Open. I don't like to trade right after London close, because that's usually where you see like a burst of volatility or some sort of reversal. I'm not sure if you like noticed that with a lot of pairs. You've heard of that before, right? The London breakout.
Which one? Yeah, yes, I've heard it, but I haven't tried trading that time generally also.
Yeah, because so like right here, you probably would have taken this trade here because this was you know, four hours before the London breakout. But right here, this is 2 hours before. So I think this would happen with that, because it seems like that's what happened here, right? It looks like price came down, and then once it hit 11 p.m., which is an hour before London Open, that seems like that was the London breakout that happened right here. So I'm not sure if this is something that you would have taken. If it was, depending on where you put your TP stop loss, that would be the difference. But this would be the intraday strategy here. It's the same thing pretty much, nothing really different about it. The only difference is that you change the setting to the trend meter and you trade it on a short time frame.
Yep.
Yeah, so that's it for that one right there. Let me see if there's anything else for us to look at. Yeah, this one here, you can do it on the 30-minute or 5-minute. I showed you on the 10-minute, but it doesn't really matter which one you want to apply on. If you want to apply it on the 5-minute, you can do that too. You will just change the trend meter settings down here. So instead of having it at 5, 10, 15, 30, you can probably, since it's shorter, you can put that at like maybe 1 minute.
135,
yeah, 135. Yeah, exactly. And then it'll show you like the, you know, the quicker trend right here. And if you took those trades there, I think on the 5-minute, maybe your TP stop loss might be like 150. So like right here, took that trade, 150, looks like it hit TP there. And then again, right here, if you took this one, another one there for another 150 there as well. Yeah, so that's pretty much it. That's it for the scalping strategies. Let me see if there's anything else here that we need to cover. And then the only other strategy that we have here would be the K2sr strategy, but this is for intraday and swing. Do you still want to go over that? I'm not sure if you trade that way.
Intraday swing, yeah, let's go.
Okay, perfect. So this is going to be the K2sr zone strategy.
Yeah.
So the indicators for this is going to be the K2 momentum indicator, and 2, the K2 SR version 2 indicator. That's pretty much it. The rules right here are going to be confirm a break and close past K2sr zone, and then confirm direction of momentum using the K2 momentum indicator. And then lastly, enter on open candle, following candle to next zone. So for this strategy here, let me just delete everything off here. This is applied on the 4-hour. So on the 4-hour time frame right here, this is basically like if you watch the live sessions, this is how I basically analyze every pair from top to bottom, because this is usually going to be the longer strategy out of the other ones. So
Yeah.
the first thing I do here is I identify the zones. So the first thing I do is I turn on the K2sr indicator. Let me just back up. Okay. So right here, I turn on the K2sr indicator, I zoom out, and then I draw my zones out first so I can identify market structure. So from here, I'll draw a zone right there. There's a zone right here. There's another zone right here. Right here, if these zones overlap, like you can see that this red zone is within this big red zone. So if that happens where they overlap, we just create one big zone like this. Next one is going to be down here. And then last one is going to be over here. So with that said, I turn off the K2sr indicator, and then we have market structure drawn up right here. So basically the way that this strategy works, let me see if I can find an example for you here. Let's see. So we have an example right over here. So looking at this green candle right here, you can see that. So the first requirement is to confirm a breaking close past the K2sr zone. So we have this zone drawn up here. You can see that this candle right here, it broke and closed past this K2sr zone right here, right? So that's going to be the first requirement. You just have price breaking close past the K2sr zone. The second requirement, you want to confirm the direction of momentum using the K2 momentum indicator. So right here, we have a buy signal. So we're only looking for buys at that point. So right here, this is a buy signal. So we're going to take a buy. So that's going to be the second requirement. Third requirement is you can enter on the open of the following candle, and you're basically just going to ride this move to the next zone right here. Because basically when it reaches the zone, price can do one of two things. It can either reject off it and come back down, or it'll break through it and continue up higher. So with this right here, you would enter your long position right there. You would reach for this zone right here, which should be about, I guess we could estimate at 700 pips. And that's pretty much it. You have that all set up right there. Let it run. And there you go, TP off that.
But then this is a big candle. Could be a risky also,
Yeah, I would consider this risky. I probably wouldn't enter this one right here. I'd probably skip this one. There was also news during that time too. So it looks like there was the employment news that was released at that time. So I probably would have skipped this one, and I would just wait for the next one. So we'll I showed you this one. I'll just go to the different one here. I'll go to the next one that I see. The next one that I see is going to be over here. Okay, so same thing again right here. You just want to confirm a breaking close past the K2sr zone. So you can see this candle right here, it breaks and closes past the zone. So that's going to be requirement number one. Requirement number two, you want to confirm the direction of momentum using the K2 momentum indicator. So again, right here, this is going to be a sell signal. So this is going to indicate that price is going downwards, right? Momentum is coming down. So with this right here, you enter your short position right here. And then you're just going to go and reach for this next zone right here, which would be estimated at about 1,600 pips. So when you have that set up right there, you let it run. And there you go, straight to TP. And it goes both ways. Again, right here. So this is one entry right here. Again, over here, there's another entry right before it.
Right before it.
So this one right here again, you confirm the breaking close past the zone. You confirm the directional momentum using the momentum indicator right here. So it's indicating that price is going to push up. So with that said, you enter another long position right here. And then you reach for the next zone right there. About same thing, 1,600. So if you were to let that right there run, right there, full TP as well. So did you get how this one works? I mean, this one's pretty simple too. It's only two requirements that you really confirm.
I haven't tried this one, but I'll try this one also.
Yeah, this one works good. I use this for all of the Forex signals. So all of the Forex trades that I call, this is what I use. because
Okay.
it moves, the Forex pairs move a lot slower. So I think this is what I use for Forex. And then I use the scalping usually for US 30 because it moves a lot faster. So that's pretty much how this one will work. And it's pretty simple as well. So do you want to look at other examples or are you done with this one too?
No, that's okay. Yeah,
Okay,
good.
perfect. Let me see if there's anything else. I think that's probably it. I don't see if there's anything else here. The other strategy here is a pivot strategy, but I showed you that already. Do you remember this one?
Yeah, I did.
Okay, yeah. And I think, yeah, and that's pretty much it. The only other one is going to be the US 30 daily strategy. Do you want to see that one?
Yeah, daily one. Yep.
Okay, perfect. Yeah. So for that one right there, it's simple as well.
That's on the start. What you do.
Yes. It's when the New York Stock Exchange opens. So pretty much every day in the morning when it opens, that's when you look for the entry. So
Yeah, I haven't seen that yet.
yeah, we haven't really because the market has been kind of back and forth, so it hasn't really been available. Usually for this strategy, we would so this is from today actually. So for the strategy today, if we were to follow the strategy today, we probably could have taken it. Looks like we would have hit. I'll just go back over here and I'll show you how the strategy would work. This is going to be the K2 US 30 daily strategy. So first, you just want to look for entries after New York Stock Exchange open, which is going to be 6:30 a.m. Pacific Daylight Savings Time.
Mm-hmm.
And then after that, you just want to confirm the first valid K2 momentum signal. And then after that, you can enter on the open of the following candle and fixed TP stop loss 1,500 pips.
Yeah, that's the big one.
Yeah, so this is the big one because it's a daily strategy. You only do it once a day. So for this one right here, you look for the entries after the New York Stock Exchange open, which is 6:30 a.m. You can see right here, this is 6:30. So after this right here, then you start looking for entries. So with that said, that's going to be the first requirement right there.
Mm-hmm.
Second requirement, you just want to confirm the first valid K2 momentum signal. So this would be the first valid signal right here since open. Mm-hmm. So from there, you enter a long position right here.
Yeah.
And it's going to be 150 points is equivalent to 150 pips. It's because we're using currency.com, so it's by points, not pips. So it'd be, this technically would be 1,500 pips. So with that said, we have that set up there. And then if you let it run, let's move it back a little bit. Let's see. If we let it run, oh, it's still running right now. So this trade is technically still running from today. So we can go over to the previous one over here. So this is from today. This is the one from yesterday. Let's go back to yesterday's. This is yesterday's entry right here. If you want to take this right here, we look for the entries after, oh wait, no, it's 12:30. Oh, 6:30 right here. Okay, let me just go back a little bit farther. It's right here actually. So right here, 6:30 on the 12th. After we have the market open, we look for the first valid K2 momentum signal. Right here would be the first valid signal right here for a sell. So if you see this right here, this would be a sell entry. And then your TP stop loss is going to be 1,500.
And the chart you open is for 10 minutes?
Yes, 10 minutes.
Okay.
On 10-minute time frame. So right here, you have that set up right there. And then if you let it run, this one took a long time, but I think it eventually it hit. Let's keep scrolling this over. So you can see right there, it went to TP. It took a long time, but it went to TP. Usually if the price, if the entry comes after 10 a.m. Pacific time, that's usually where I don't like to take the trade, because once you get to there, you start to cross over into the next session. And you can see right here. So right here, it was in profit during New York session. But then as soon as we went to Asia session over here, so this would be Asia session right here. So you can see it was in profit. Then we go into Asia session. It just consolidates, right? Just consolidates. And then during London session, it pushes up before it comes right back down. So if this entry comes a little late, I usually don't like to take it because it being the daily strategy is that we want it to open and close within the New York session. You don't want to hold on to it, the entire day. You want it to open and close within that one session.
Yeah.
So usually around 10 a.m. That's why we didn't call this trade yesterday, because it came a little too late. And that's pretty much the strategy there. I mean, if you applied it again right here. So here's another example of the one before, or let's see, what was it? The 11. Oh, that was Sunday. Oh yeah. So I think those are the only entries that were available there. The only different one would be this one on Friday, but we usually don't trade on Friday. But even if you did take this trade, so this right here, same again, or no, it's over here actually.
It's 12:30. Yeah.
6:30.
Yeah. The green one. Yeah.
So that one right there. So this is why we don't like to trade on Friday, because since it's a daily strategy, it's, on Friday, the market moves kind of differently. Sometimes it kind of does this, or it does a weird movement. So this is why we usually don't trade it on Friday. But if you took this, I think this would be a loss. That's why we don't trade it on Friday. It'd be the sell. And if you took that sell, it would have just reversed directly on you right there, straight to stop loss, right? So this is why we don't trade on Friday. But if you took the one before that, let me see if there's another one here from the previous day. Right here, yeah. So the previous day on the Thursday, this would have been the entry, 6:30. You go back here. Okay, so this is on Thursday, April 8th. We look for entries after 6:30. We look for the first valid signal. Right here is an invalid signal, so we skip that. This would be the valid signal, so we would take this. And if you enter that there for 1,500 pips, that'd be the entry right there. And then if you let it run, I don't know if it ends up playing out. Let's see.
Because it's after 10:30 again.
Yeah, again, it's after 10:30. Yeah. See, usually if this happens, we don't like to take it because it ends up going for too long. Usually if the signal comes early, like within this area, it'll go right away. But if you hold it for too long, I mean, it looks like, let's see, does it still hit? Oh, it does hit, but you're holding this for almost 24 hours, a long time.
Long time.
Hold on to it. So it becomes risky at that point. If you want to take it, I mean, you can. But me personally, from the way I trade, I figured that this is just, it's not worth the risk, right? If you're holding it for so long, especially if you're going for 1,500 pips, it's a big move. Usually if this happens, like say, for example, if we take the trade like this, if we get close to market close, I'll just close out. I'm not going to hold it any farther. But if you want to hold it, I mean, you can hold it. It's worked for us for a long time now. We've been using it, I think, every day for a year from last year, and it's still pretty accurate. It's probably like maybe above a 76% win rate, maybe even higher if you avoid like Fridays and you avoid news days. It's still accurate. It's just I don't, it depends on your personality. If you can handle the risk, like if you like holding trades for a long time. I'm not a swing trader, so for me it tests my emotions if I'm holding on for it for so long.
Sure.
Yeah. Sure. So I don't necessarily like doing that. But other than that, I think that's it. I don't know if there's anything else that you want to cover, but I think we covered.
No, one more. Yeah, one thing which I want to check. I think we were chatting 2 days ago. The margin and the leverage, which I want to.
Oh yeah. Okay. So which broker are you using? I think you said your broker was your leverage is too short, right?
I have few brokers. I use it for different things and all. But I've seen that means what's the margin? Let's say whatever you are using, how much margin they take for one lot?
For one lot, well, I'm not sure because I don't use high leverage. Like when I use leverage, I use proper risk. So when I do trade, I only use 1%. So my margin is probably going to be 1% of my account, which would be
no. Margin will be per lot basis. They must be taking you on a per lot basis. It's not how much leverage are you taking, but it's more on a per lot basis.
No, exactly. But that's how margin works. Like margin, if you're trading, if you're trading with your account, like say if you're taking a one lot, and then your margin is going to be based on how much risk you have involved. So like, for example, if you're in the negative, your margin is going to get eaten out, right? If you're in the positive, it's not going to eat into your margin. So it depends on your position. Do you get what I'm saying? Because your margin changes. Your margin changes if you're so say you have a position, it's in the positive, right? It's not going to eat at your margin because you're in your equity's above. But if you're a negative, that's when it starts to eat at your margin. That's why your margin's so low, because you were in the negative when you show that screenshot, because all your trades were in the negative. So when you're in the negative, it eats towards your margin. But if you're in the positive, it releases margin where you can take more trades. You get what I'm saying?
But according to me, I think it's like when you take a position that takes a margin, and then when you have a balance or the equity, it takes the M2M or the drawdown, it adjusts it from there. It doesn't touch your margin. Margin is fixed per lot or per you know how much you have bought it for that. So that's fixed. Like for a gold, okay, I buy one lot, it take $450 straight fixed. That's all. I buy
Yeah.
10 lots, it takes $4,500 from my account. It blockets for that time till the time I
Yeah.
square off that positions. And whatever it moves up or
Yeah.
down, it will remain the same. The margin will remain the same, but the M2M or the drawdown, what we say, it changes. But for US
Yeah. Well,
30,
it would depend.
yeah,
Yeah. It would depend on what you're trading too, because if you're because you trade gold, so that eats a lot of margin.
yeah.
So
No,
gold,
but no, US 30 is taking much. For one lot, one small lot, it's taking $1,600 for one lot. And let's say it moves let's say it's 33479 and it moves 33480, then it gives me only $1 profit because leverages are low into US 30. Looks like.
I think yeah,
There's a
it
big
would
confusion, and
it,
even if you see in the chat boxes when lots of people send the screenshots, everybody is having similar different one. Like one is trading one lot, but they're having a profit of let's say $1,000 or something. One another is trading 10 lots, but they're having a profit of the same $500. Even the change is same.
exactly, yeah,
It
because
depends on broker to broker.
yeah, it depends. That's what I'm trying to. Yeah, it's going to depend from broker to broker because
Yeah.
some brokers use mini lots, some brokers use standard lots, some brokers use
Yeah.
nano lots, right? So like some brokers, like a standard lot for me on the broker that I use, we use mini lots. So it's going to be different for me versus I'm not sure what your broker
Yeah.
uses. Your broker probably uses standard lots. That's why it eats a lot of margin. But for me, it's a little different since it is. Yeah, so CT here in the group, he said it sounds like using a futures account. So yours is a little different because for us, we're trading the indice, right? We're trading indice. It's measured differently versus I think your broker probably uses futures, which is going to be standard lots, like standard contracts. So it'd be measured in that way. But it's going to be hard for me to determine what margin is for you compared to me because our broker is totally different.
Sure, sure. So
Yeah.
what should we play in? It's like US 30 cash, indices, futures. Every broker is having different terms in that.
Exactly. Yeah. So for FTMO uses LMAX as their broker. So LMAX,
LMAX. Yeah,
yeah.
okay.
Yeah. So if you want to use the same one that we're using, we use LMAX. They use mini lots. So for us, margin is not as heavy. But it's, yeah, standard lot for us is going to be equivalent to maybe a mini lot for a standard broker. So a 1 point, a one standard lot for us is going to be equivalent to maybe a mini lot for you. That's why it's like a big difference between our margin.
Sure.
Yeah.
Yeah. No, I can open with LMAX. That's not an issue.
Yeah. So if you want to trade the same thing we're doing, the broker or the broker data that they use is LMAX.
Okay.
I know a lot of other people they use. You have a big balance, so it doesn't matter for you. You can use any broker really. But if you have a smaller broker, I think other people use CoinEx. I wouldn't really use CoinEx. That's only if you have a small account.
Yeah.
So I would prefer using LMAX. If you can use LMAX, that's what I would use.
I
I want to use them personally, but they don't accept US clients. So unfortunately, I have to use like Hugo's Way. They're not very
yeah.
good, but I mean, I have to work with what I can get here in the US, unless I use a futures broker.
Yeah, I'm in Australia, so I can use any of them, any in even
Oh,
the
perfect.
US ones and the psychic ones and from Cyprus or anything. The last month, on 29th March, the Australia had a new regulations. They don't even for the forex, they don't give a leverage now more than 30.
Oh,
30
wow.
is to 1. That's the max. So we cannot play much into the into the forex also. So I have to move everything to other brokers from
Yeah, yeah,
outside.
yeah.
Yeah.
It's the same situation here in the U.S. Like if
In
we
US,
want to,
yeah,
yeah, if we want to trade, that's why we have to use unregulated, like Hugo's Way.
correct.
It's not a great broker, but that's like the options that we have here if we're not trading a very big account. So that's why I like FTMO because we can use LMAX and use their use them through FTMO rather than having to open our own account because it's not possible for us.
But for LMAX, I can open it, isn't it? I don't
Yeah, I
have any
believe
issue.
so. Yeah, I believe so.
Yeah.
They just don't accept US clients. So I think it's
Yes.
just US. I know they accept UK clients.
Yeah.
And I'm sure they accept Australian clients too, because I remember when I
They do.
looked
They do.
at
They do.
theirs, it was just US that wasn't accepted.
Hmm.
Yeah,
Okay. I'll open it today and I'll start working on it. Let's see.
perfect. Yeah, yeah, and they work pretty good. You know, they have good execution times. I think their spread is not wide at all, and I think their commissions are not that big either. So you should be fine with LMAX. I think they're probably one of the best brokers that I've used, like uh, aside from any of the US brokers that I've used before.
Okay. Yeah. No,
Okay.
thank you for that. Thanks, Shawn. I'll test this for a week or two and then I'll rebook a session if I need anything.
Yeah, yeah, definitely. When you find something that you really like, or if you run into any issues, we can go over it again and we can figure out a solution to it. Because there's always a solution to trading. Usually,
Absolutely. Yeah.
like one thing that people use sometimes, if you start to lose trades a lot, you can always just turn on the K2sr indicator, because a lot of the times when people run into bad trades, it's because they're reaching a resistance or a support, something
Yeah.
like that. And that's usually something that can be easily fixed.
Yeah. And your order blocks will take some time to finish. Well, what are you looking into order blocks?
So I've seen a lot of different order block indicators. I know how to identify order blocks without the indicator, but it's hard for me to teach a beginner trader, right? A beginner trader, they don't know what to look for when we're looking for order blocks. So the order blocks indicator that we're creating, it's going to be basically, a basic order block indicator, but it's not going to repaint, because like the indicators that everyone's using now, it
Yeah.
repaint. So sometimes they're not sure, is this a real order block, or is this maybe temporary? So what we're working on is just to make it where it doesn't repaint and where it's a little more accurate. Because you've seen how the strategy works. Like it works pretty solid if you can get proper entry point. Like we have the order block here,
Yeah.
and then it's followed by a K2 momentum signal, because that's basically what the order block is. It's just indicating a rejection off a strong price point, and then we have the sell signal there, and then we just take the sell there, and then same thing vice versa for the buy. The only problem here is that there's so many order blocks here. You don't know which one is going to be the good one to follow. So what we're trying to do is make it more accurate so that you don't have so many things on the chart.
Sure.
Yeah. So that's probably going to be the thing that we're working on right now. That's our main focus. Once we have that done, then we can release this strategy as well. But if you understand how to identify order blocks, then it's pretty simple. You just identify the order block and then you catch the momentum pushing away from the order block, and that's how you would take the trade.
Yeah, it has to reject from there, and
Exactly.
yeah.
The only main issue is just finding where it where it's actually a good order block, because there's so many order blocks.
Yeah, it again make the zones.
Exactly. Yeah. And you that's one thing that we've been using too. You can even turn on the K2sr, and that actually you can kind of see that if it rejects off the K2sr and it also rejects off the order block, it's usually pretty on point. But if you turn on the K2sr, there's still so many zones there. It's hard to really tell. But if you're able to identify like something like this right here, we have a K2sr there, and then we have the order block plus the sell signal. It's a big drop that you can catch right here.
Correct. Yeah.
Yeah. But yeah, basically all the strategies are based off momentum. So we're just looking for ways to make things a little more accurate.
Yeah.
So hopefully within the next month or so, we can get that indicator developed, and then from that point we can give it to you guys, and then you can start using it from there.
Fantastic. I've drawn lost good money these in a very short time.
I didn't know.
I have to recover a lot.
I couldn't believe that was your real account when you showed it to me. I was like, wow, I thought it was just demo or something.
It's real. It's actually me, and my cousin plays onto the same account, and he is a gambler. I keep playing properly. I try to make money, and then he comes up and he just played this and shoot ups. So last night he played, he done 66K.
Wow.
Yeah, but then the other day he lost 144K. So he just come up and
back and forth.
blow my account.
Yeah, no, definitely. But I mean, yeah, you'll make it out, I'm sure, eventually.
Yeah. So that's why I'm putting up my all strategies all together. I'll make it something proper, and once I do, then we'll work it separately.
Exactly. Yeah, no, definitely. Yeah. I'm sure you'll make it out. You'll make it back maybe by the end of the year, hopefully you make it all back,
Yeah.
all profit.
Yep, yep. We'll do it. We'll do it.
Definitely.
That guy
Okay,
is quite.
Sajid.
Yeah.
All
Thank
right.
you. Thanks, Sean. Thank you
All right.
very
Is there
much.
any other questions? Are you good for
No,
today?
all good. All good. All
Okay,
good. Thank
perfect.
you very much.
Good talking to you, and I'll see you tomorrow.